All right, welcome into Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. If you've been here all day, we'll try to make you stick around. I mean, we've got a report tomorrow, so a large part of what we say today is probably going to be erased come 11 o'clock tomorrow. Well, we'll see. Let's talk about the markets first, though. Let's see what the corn board's doing. We're just ticking lower. We've been around this level for most of the morning. 428.25 last in May. That's down 4.25 cents, and that's only 3 ticks off the low of the day there. But we've only had about a 5-cent range, just under. So no big shakes, but it's, again, another day, I think it's 9 days in a row we've ticked lower here in corn. Dees is down 4.5 cents to 463.5, and that's a penny off the lows, and that's where we were the last time we checked. That market has slowed down considerably. Soybeans, they're lower by about 5 to 6 cents across the board. We got a May board that's down 5.25. 11.93 is last, and that's, about 3.75 cents off the high of the day, and about 4.25 cents off the low. So there you go. That's what's happening in May. It's right in the middle of the daily range. 6 cents, let's go 6.5 cents lower in the Nove. 11.84.5 is last out there. Let's see about the Chicago wheat market. That is mixed. We got a May board that's up 1.75 cents to 545.25. And as you go out the deferreds, we start to lose real estate. All the way out to Dees, that's down just 1/4 cent, 1 tick, $6.50 even as where we sit. And again, we're a penny and a quarter lower in the March to 6.18 3/4. So from Chicago wheat, we go to the hard red. That's Kansas City. Kansas City wheat, we've got a May board that's up a tick, 577.5 is last there. Going on to the deferreds, let's go to the Dees. That's down 3 cents. So that's kind of the similar situation. 602 even is last there. And that's 2.5 cents off the low of the day. All right, from the hard red in Kansas City to the spring wheat in Minneapolis, here's where we got a little bit of a rally going. 2.75 cents higher in the May contract there. 650 is last, a penny off the high of the day. And we've had a 6-cent range. That should give you an idea about what's been happening there. Dees is up 3.5 cents to 679.75, and that's only a 0.5 cent off the high. So there you go. That's spring wheat. Moving from spring wheat, we go to cotton. Cotton is the one that's having the hard time. 206 points lower in the May contract at 91.35. Dees is down 85 points to 83.45. And that brings us to our next guest analyst, Riley Schwieger. He's with CHS up in, I think it's Inver Grove Heights, if he's up there with everybody else. I think he is. Yeah, there he is. All right, Riley, what say you? Floor is yours.
Well, thanks. On my side of the world, looking at energies here, it's been a bearish week. We saw crude prices, last week run up to 84. We saw the complex as a whole really kind of tip a little bit overbought. We saw some profit taking come in over the last couple of sessions to really drive prices down, and that's just really continuing into this week. We did see the EIA report today to provide a little bit of direction, not a whole lot, not too many surprises here. But we did see crude stocks up 3.1 million barrels. That fell relatively in line with estimates. Comparing to 5-year averages, those stocks are 8.5 million barrels below the average mark there. And then gas and diesel did flip-flop. They were looking for a pretty healthy gasoline draw, and we saw that go the other way. We saw a build of 1.3 million barrels of gas. We did see demand come off, and we did also see exports drop, which I think contributed to that. Diesel, again, flip-flopped as well. They were expecting a little bit of a build, and we saw that go the other way for a 1.2 million barrel draw. Diesel stocks, 8 million barrels below the 5-year average level. If you're looking at peak 2022-ish deficits, when we were over 30 million barrels under the 5-year average, we're sitting in pretty good shape. But demand overall, just for petroleum in general, is trending above year-ago levels, which I think is supportive, especially if we're looking ahead, kind of this summer, anticipating maybe some interest rate cuts. In general, the lower interest rates will be supportive for energy demand, should help support these prices. But, looking ahead, if you're an end user, the trend certainly feels higher given some of the geopolitical risks with Russian refineries being knocked offline. You see dips like this, a week like this, I would certainly be looking at some prices for either spring, which is right around the corner here, or fall, ahead to harvest. So that's kind of what we're seeing this week.
All right, that's great stuff. We're going to go away and we're going to try to digest all of that. That just about does it, I'm sure. Thank you very much, Riley Schwieger. He's the CHS Inver Grove Heights up in Minneapolis. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock right after this.